Ether leads post-Fed crypto market rally as yen weakness sparks risk-on frenzy. From the US dollar to cat-themed cryptos, global assets roar back following the FOMC's bold move. The US dollar index climbs above while a weakened yen fuels risk-on momentum. Ether skyrockets with meme coins leading a surge. Bitcoin gains but loses market dominance. Oil jumps 2% amid Middle Eastern tensions. Gold rallies and Nvidia and S&P 500 ride the risk-on wave. On Sept 18, the Federal Market Committee, FOMC, made a pivotal decision that significantly impacted risk-on assets. The Federal Reserve cut interest rates by 50 basis points, setting a new target range for the federal funds rate at 4.75% to 5%. This move sparked debate, with some arguing that the Fed may have been late in the rate-cutting cycle, potentially signaling an impending recession. Historically, the last two times the Federal Reserve started with a 50 basis point rate cut were the 2001 and 2008 recessions, raising concerns that this current cut might signal similar economic challenges. However, others suggest that the Federal Reserve may be navigating a Goldilocks period where the economy grows sustainably. U.S. GDP growth for second quarter was a solid 3% on an annualized basis, and headline inflation has fallen to 2.5%, the lowest level since March 2021, reducing the need for real rates to remain this elevated. The real rate is the difference between the Fed's target rate and the inflation rate. Furthermore, the Atlanta Fed's GDP Now model predicts a Q3 GDP growth estimate of 2.9%. Further, supporting a balanced economic environment, impact on key macro assets. The development has been the significant rebound in the crypto market. Ether surged nearly 14%, highlighting a resurgence of investor risk appetite. Within the cryptocurrency space, cat-themed meme coins have led the charge, emerging as some of the top performers with gains of 40% in just a week. Bitcoin BTC also saw a gain of over 5%, although its dominance in the crypto market dipped below 58%, signaling a broad-based rally across other digital assets. Following the FOMC decision, several key macro assets have reacted positively. The US dollar index DXY rose by 0.36%, pushing the index back above 101, a level widely regarded as vital. Meanwhile, the USD-JPY exchange rate, which had dropped to around 141 just before the Fed's announcement, has since climbed to approximately 143.5. The weakening yen has further bolstered risk on assets, including cryptocurrencies. Crude oil prices have climbed over 2%, potentially influenced by ongoing geopolitical tensions in the Middle East. Gold, a traditional safe haven, also saw gains. Additionally, Nvidia shares increased by just under 2%, while the S&P 500 index SPX rose by over 1%, indicating that risk on asset classes broadly welcomed the Fed's decision. Crypto ETFs see inflows. The buoyancy in the cryptocurrency market was further supported by inflows into both Ether and Bitcoin ETFs on Sept 19 and 20. Ether-based ETFs recorded million in inflows over these 2 days, while Bitcoin ETFs saw much larger inflows of million, according to Farside data. Performance of market capitalization groups. When analyzing performance from a broader market perspective, it becomes clear that large, mid-tier, and small cap coins all faced underperformance in the lead up to the FOMC decision. However, coming out of the FOMC decision, small cap cryptocurrencies have emerged as the biggest winners. Despite their early struggles, all three capitalization groups, large, mid, and small caps, have now made relative highs against Bitcoin since the Fed's announcement, reflecting a general increase in risk-on sentiment and liquidity across financial markets. Market capitalization groups are typically defined as follows. Large cap stocks have a market capitalization greater than $1 billion. Mid caps fall between $100 million and $1 billion. And small caps range from $50 million to $100 million. Looking ahead, the CME Fed funds futures are evenly split, with a 50/50 probability of either a 25 or 50 basis point rate cut at the upcoming Nov. 7 FOMC meeting are scheduled just 2 days after the U.S. presidential election.